Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to talk about the severe housing shortage that Jerome Powell has finally acknowledged. He finally has figured this out. He's so in touch with, his finger is on the pulse of the economy. He's just decided there's a housing shortage. So we're going to talk about this article. But first, we got a great one that's going to come up tomorrow. It is about the possibility of some federal entity regulating even stricter real estate. And we're going to talk about that tomorrow. This is all up in the air right now, but we're going to talk about potentially how that could be pretty bad. Remember this, it's the government trying to help. They're going to help you. Whether you want it or not, they're going to show up and help you. Okay, they got a bunch of great ideas. They figured out how to help you. Just like Jerome Powell, this is what the article says. Jerome Powell says the housing market is in a very challenging situation right now, and interest rates cuts alone won't solve a long-running inventory crisis. Mm-hmm. So, Juana, there's two things. There's home prices, and there's affordability. Why are they completely separate things?
Well, because affordability just has to do with the debt service that people can handle, right?
Oh, debt service, okay.
Okay, and then home prices are home prices. You know, the issue with it is that I think people conflate the two.
Okay, so over 42% of all homes in the U.S. are owned free and clear.
Correct.
There's a group of people who basically believe that a house is just a monthly payment. Mm-hmm. So if your lender goes to you and says your max monthly payment is $3,000 a month, you say, okay, well, how much house can that buy me? Mm-hmm. Which is like almost the worst thing you could possibly do, right? You're just making a decision based on a monthly payment.
Okay.
Right? Mm-hmm. Okay. So we have this problem we have this circular thing going on right now in real estate between interest rates, inflation, the Fed, and the inventory shortage.
Right.
We're going to talk about this. This thing that's happening in real estate is actually not going to get better because it is feeding itself. And I think Powell has figured this out.
Yes.
I don't think anybody has said it. Actually, we said it. We've said it a couple times. Powell probably watched it on our show. Okay? Now, let's go through some of the quotes here, and then we'll tell you about this vicious cycle and if there's even a solution for it. There is a solution, and we need to build more homes.
Yes, that's part of the solution. I have another one as well, but yes.
Okay. All right, here's first quote. Housing market has a problem. Millions of them. The country short between 3.5 and 5.5 million housing units, according to various estimates. The root of the shortage go back to the aftermath of the GFC, where cautious developers were hesitant to invest in new construction and set a precedent of undersupply that's continued to now. Juana, we just did a video where they quoted it was the baby boomer silver wave one that was really bad. The article is really bad. But they said 2 to 7 million. Like literally nobody can figure out. Like we can't even get within 4 million how many houses we're short. Why is that?
Because this is a government statistic.
Okay.
And they're helping me again.
They're helping you again?
I know.
What do you think about, because all the houses are occupied. We have the highest occupancy we've ever had in the U.S.
Yes.
Both owned homes and rental homes, meaning
yes.
owner-occupant homes. They're both at, I think the vacancy rate is like 4 or 5%, which is basically fully rented because remember you have that transition period. Yeah. And then we have 99% of all owner-occupied homes are actually occupied.
Correct.
Right. Okay. So if that's the case, where are all these 3 to 3.5, 5.5? Remember, these are households.
Right. So what they're talking about is they're looking at maybe multi-generational households, and they're not sure if these people are multi-generational in a home by choice or by necessity. They're also looking at young people who are looking to leave their parents' home and I think it's getting a little bit harder for the government to figure out at what age people are moving out of their family home, at what age people are coupling up with life partners and that sort of thing. Things are changing in our society, so that's part of the reason why the government's kind of having a hard time with that. The other thing is we're having a hard time figuring out our immigration numbers, and so that's and I'm not being political about immigration, but the reality is if you can't figure out how many people are coming into your country, then you can't figure out how much housing you need for these people. So that's just another data point.
All right. Here's a quote. The housing market is neat. This is the Powell quote. This is Jerome Powell. So this is his exact quote. This was to Congress. The housing market is in a very challenging situation right now. Problems associated with low mortgage lock-in and high mortgage rates and all that, those will abate as the economy normalizes and as rates normalizes, he said, referring to the mismatch between something approaching 90% of homeowners with mortgage rates below 6% and the current market offering above 7%, but we'll still be left with a housing market nationally where there's a housing shortage. So there's this thing going on, Juana, that we talked about it before. Okay, you have a shortage in housing. Mm-hmm. So because of that, you have more dollars chasing fewer homes. It's pushing up home prices, is pushing up rents.
Right.
Now, rents going up is causing that number to feed into CPI data because they don't take the value. They don't take home prices. They only take rent prices.
They don't take mortgage payments and they don't take home prices. They take rent prices because a rent is considered like a good, right? So that's a lot of the reason.
It's spending.
Right, it is. Well, you're spending money on a mortgage payment too, but that's a different, they consider that an investment.
It's an investment. Okay.
Yes.
So we have a housing shortage, so that we have more, so that's pushing up rents.
Yes.
Right? Okay. By pushing up rents, it feeds into the CPI. Mm-hmm. And the CPI says, oh my gosh, we have inflation because look at rents are going up. It must be inflation. And then the Fed tightens interest rates, which keeps rates high. And then you have this.
Well, I think that's a little simplistic because the Fed does differentiate between all that. They do look at inflation numbers and they do exclude certain portions because they look at it in different ways in order to administer monetary policy.
They do. But they tend to administer things that fluctuate.
Yes.
Which are energy and food.
Yes.
But housing, the problem is, the last time we looked at it, rents were up 6% a year, and it was weighted 40%.
Right.
So, 80% of the inflation was in housing. The inflation was literally in housing.
Well, yes, and what I'm saying is because the Fed has actually a breakdown of all the pieces that it considers, the Fed can change the amount of weight that it gives to rent, but they've chosen not to.
Right. So, I think the problem is the Fed goes, oh my gosh, look at all this inflation. Let's raise rates again. And then it creates this problem that gets worse. And then, builders build less, people buy less. And there's more scarcity.
But the Fed has the power to change the weight. And what I'm saying is if the Fed were truly saying that, hey, you know what, the reason that inflation appears so high is rent, well, we can change the amount of weight that we give to rent in the inflation numbers, and then that would taper inflation. But they're not doing that, and there are reasons for that.
Yeah. Right. Here's the next quote for the article. You have a shortage of homes available for sale because many people are living in homes with a very low mortgage rate and can't afford to refinance. Well, you wouldn't refinance a low mortgage rate. That makes no sense. I don't know why he would say that. So they're not moving, which means the supply of regular existing homes that are for sale is historically low and a very low transaction rate, Powell said. That actually pushes up the price of other existing homes and also new homes because they're just not enough supply. All that's true, but this thing is, if you have a very low mortgage rate, why would you refinance? That makes no.
I think he misspoke.
Do you think he's thinking of?
I don't think he. I think he just misspoke.
Do you think he meant you can't afford to buy
You can't afford to get new financing. Yes.
Okay, so you can't afford to buy. I want to move to San Diego, and I live in Los Angeles, and I have a 3% rate, but the house in San Diego, I'd get a 7% rate, and it's an $800,000 house down there, but my payment would be more than my $500,000 or my $1 million house in LA because my rate's so low.
Correct.
Okay. All right. Next quote. The pandemic only made things worse. High inflation has made materials and labor costs far pricier, and ballooning mortgage rates have pumped the brakes on an already slow sector. National Association of Realtors data showed there were only 3.2 months of available housing as of the end of last year, about half as much as there should be in a balanced market. Mm-hmm. So this is literally, if you think about the total supply of homes, mm-hmm. I think what they're alluding to is if you have 140 million homes in the U.S. and you have your normal 4 to 6 million, well, 5 or 6 million that sell in a year, right? It's 5 or 6 million. That gives you a better price. Remember, because of all 140 million homes, if you only sell 5 million, that's a very small amount of homes. Correct. It's a very small amount of homes. Yes. So you're only pricing those homes. Mm-hmm. You're not pricing all the homes.
Right.
When you see home prices, you're inferring that those other prices are. If all 140 million homes came on the market at once, they ever said we all have to sell. Literally, people would be selling homes for like thousands, like in the thousands of dollars. They'd be like, look, just here, give me some money. I got to get out of this. But no one's buying a house because everyone in the world's selling their house. There'd be no one to buy. Mm-hmm. So the idea that we have a very small number of sellers and we still have pretty strong buyer demand relatively, even with high interest rates. I think that's the thing the crash bros all missed because they missed the fundamental of supply is super low.
Right.
They're just looking at thinking, high interest rates, nobody will want to buy.
Yes. Yeah. I mean, look, I think the issue with the loans is, and that's something we've talked about before, I think that's the piece that I think is missing is the lenders getting involved and the lenders seeing the opportunity. I mean, you and I have talked about this, and I see an opportunity in all this. If I was a lender and I'd say, hey, if I was bank XYZ and I've loaned out lots of money for mortgages, I would go to all my current people that have mortgages with me, and I'd say, hey, you have this 3, 4, 5% mortgage with me. Tell you what, your mortgage is assumable. And if you want to sell your home, you can use that as a selling point and go out and buy another home. And if you finance that new home with me, I'll give you half a point off the loan or half a point off the interest rate. That's a good way for them to generate new business. And the fact that they're keeping the existing loan, that's fine. They're stuck with that loan anyway because these people aren't moving. So rather than not generating new business, they would get the people that are in that home right now moving, and they would generate new business by having these people now go out and buy another home and then selling this home to somebody else. It doesn't change anything about this loan because it's being assumed.
If I owned paper on houses that was at 3%, I would do everything I could to get those people to sell those houses and extinguish that 3% that they're paying me so I could get my money back and lend it out at 7%. Because that's a big thing right now is, these retirement funds and all the people that bought the paper are only getting 3% because that's all the people are paying, and and new debt is at a higher percentage.
You're right.
But there's a huge incentive for these people to not want to give up their super low debt.
You're right. However, those pension funds that own these notes are not servicing these loans. Who's servicing these loans are generally the banks who originate these loans. And these are the banks that I'm talking about that would make money by getting these people to sell their homes, have the new buyers assume the old loan, which these banks are not carrying, and take out a new loan, which these banks would then do the loan and make money on. And that's my point about the opportunity.
Right. No, I was saying that the people who own the paper.
This is not about them.
No. But what I'm saying is the people who own the paper it's like a junk bond.
Yes.
It doesn't pay enough money. It's like it's actually the worst thing you could have because if you have these, if you're invested in these super low percentage mortgages,
Mm-hmm.
you're almost, because remember what happens over time is people extinguish the loans.
Mm-hmm.
These people are never going to extinguish these loans, and just like you said, they're going to let people assume them, and then it's just going to go on forever. So you're going to be stuck with this 3% in, return or less, because there's other costs involved, with potentially inflation that's more than 3%. Like, it's literally, you do better if you bought a money market than if you bought 3% loans. But
Right.
people thought when interest rates were 0, 3% loans were like the best thing in the world.
Right, but I'm not talking about those people. I'm talking
Right.
about lenders out there who understand how this works and who would benefit from marketing to these people who have these assumable loans, helping them figure out how to access that process to have the loan be assumed, and then open the door to a new loan for that seller.
Oh, yeah. Sure, it'd be great, because then they would say, now I'll give you a 7% loan. And they'll be like, wait, I had a 3% loan. No, don't worry about the 3% loan. Get rid of it. Assume it. Go take the 7%
But what
loan.
I'm
That'd be
saying is
great.
that they could offer those people half a point off, and that might move the needle for some people.
Yeah, it might. Here's another quote. Powell's threading a tricky needle. The housing market is a big driver of the domestic economy, and overstressing it by keeping interest rates high for too long could threaten the rest of the economy. Happened in GFC, right? Credit default swaps. On the other hand, cutting rates too soon or too quickly in line with the industry's demands could undermine the Fed's years-long attempt to stick a soft landing, keep inflation under control. Okay, Juana, here's my problem with inflation. We're measuring inflation by a government number that's basically hardwired to show inflation because of it's too heavily weighted on real estate, which has been getting scarcer and scarcer over the last 15 years.
Which is what I'm saying, that the model needs to change.
Right, the model needs to change. Okay, here's a last quote for the article. And this number surprised me, I didn't know this number. Housing activity accounts for 16% of GDP, according to the National Association of Home Builders estimates, wrote a group of housing industry trade organizations in a letter to Powell last fall. We urge the Fed to take these simple steps to ensure that the sector does not precipitate the hard landing the Fed has tried so hard to avoid. Now, one of the problems with this is real estate the effects of real estate take a longer time to percolate.
Right.
Now, so for all the people out there, we had a radio show talk about house in 2005-06. Basically, we could see what was getting ready to happen with housing. We decided to go after foreclosures because we knew they were going to come. And this was in 2005 and 6. Remember, the housing crash, the great financial crisis, 2008, we were way ahead of that because we were already, in 2006, we were already dealing with the banks and getting the foreclosures. Right. So remember, from 2006 to 2008, housing was starting to tank, but it wasn't yet affecting the economy. It was, it took a while for that to happen. So this idea that, something would happen with housing and then a week later the economy would crash or something, that's like a conspiracy theory, right? It's just like the idea that if someone lost their job, the foreclosure would happen Monday following. Like if they lost their job on Friday, on Monday they would get posted for the foreclosure, and by Wednesday it would be sold at the courthouse, and right?
So look, if something happens to housing, it's because other things have already happened in the economy. Okay, housing is not the first, housing is the last. So that's the first thing that we need to talk about. And then the second part that we need to talk about is that there are a lot of businesses that are kind of sitting on the sidelines, ready to ramp up their production, ready to hire, ready to, again, put more money into the economy, which spurs on inflation as soon as interest rates come down. So the Fed is not unaware of this. Remember, they do spend a lot of time speaking with business leaders so that they can get a better idea of what's happening in the economy. So the Fed is very cautious about this because they understand that when a lot of businesses hire and produce, then that also puts financial pressure on the economy, and you're having, again, money chasing too few goods.
What do you think is going to happen this year, election year?
So, I was really very proud of Chairman Powell. Not that he cares how I feel about him, but I was really very
He
proud.
didn't mention your name
He did,
in
I'm
front
sure.
of Congress.
Yes.
He mentioned my name, but not
There
yours.
you go. So he was talking about how they were going to be very cautious going forward as far as any rate cuts, and I've heard the same thing from other members of the Federal Reserve, that they are going to be very cautious, that they are anticipating a couple quarter point cuts throughout this year, probably not until starting the summer, and that they would not be back to back, that they're very serious about their mandate to keep inflation under control and to manage the economy in such a way to maximize employment and really follow through with their charter. So I was really very pleased with that. They are very cognizant that it is an election year, and Powell did say, to his credit, that even though it's an election year, he's not interested in being pressured into doing something that is going to be perceived as being political, that he is very focused on doing his job as part of the Federal Reserve and keeping inflation under control, keeping the economy going, and full employment.
Okay. The last thing I'm going to say, and I'll let you wrap up the video.
Okay.
The overwhelming thing that we've been talking about probably for 15 years is that the underbuilding of homes is created a shortage. And a shortage affects prices.
Yes.
That is it's scarcity, which has the largest effect on price. Demand does have an effect on price in real estate. But remember this: if you have 100 people that are going to buy a house, 35 are going to pay cash, about another 35 are going to put over 20% down. They're going to put 30, 40, 50% down. And then that last 30% are anywhere from, trying to get 0% down to, 15. They're just putting smaller amounts down. Okay. So remember that you got the cash people, the over 20% down, and then the people who are probably the least qualified, right? Okay. So whenever you have a shortage, those are the people that get cut off.
Right.
The people that get cut off are the least qualified people. So you ask yourself, why didn't housing crash? Well, the cash buyers don't care about interest rates. They're paying cash. They're not borrowing the money and then having to make a, hope that they don't lose their job and make a monthly payment. The second group of people probably have sold a house or just have the cash and are using it to move to the next house and maybe just financing the difference because it's a more expensive house or they want to do something else with their money. So the people that are, the reason why housing is not like a complete mess is for the same reason prices went up when interest rates were 16% in the 80s. Home prices went up when interest rates were 16% because it has to do with supply and demand and not necessarily these ancillary inputs that are really little factors.
Right.
Yeah.
So the thing to keep in mind is that every day that passes, the labor force that actually builds homes gets older and more of them retire.
Yeah.
So that is a limiting factor to being able to build homes going forward. We do not have sufficient new people entering the trades to replace these people. So home production is going to continue to be lower than what we need. And unless something changes, it's going to slow down even more. If nothing else, then based on the labor pool. The other thing to keep in mind is that while materials might get better, might get worse depending on what's going on in the market, what isn't getting better is the availability of land, particularly in cities that are landlocked through natural barriers like oceans, for example, or mountains. And then lastly, we have regulation. And I know I probably should have started with that because that's probably the most immediate hurdle. But regulation is something that our elected officials have the capacity to change, just not necessarily the will. And not the know-how. I think that's really the thing that not a lot of people talk about. I think we all talk about maybe their will or their motivation, but we don't talk about their know-how. So we have a lot of elected officials who simply are not, don't have the educational background, don't have the experience. I don't know what it is that they're lacking, but they simply don't understand how the process works.
You
And
don't know what they're lacking? Just say it. What was their qualification for getting elected?
their ability to raise money.
Popular.
Their ability to raise money. They don't become popular until they raise money.
Yeah, they raise money.
Okay.
And they're popular.
So,
have nothing to do with skill or ability.
Correct. So the point of that is that until those regulations change and become more more friendly to building and keep in mind the needs of the community versus what other priorities that they may have,
Yeah.
it's not going to get better. Look, it's very expensive to build homes because all the permitting process and the time that it takes and the bureaucracy involved, it's a big machine, and it's very difficult for builders to take that forward.
Even with all the baby boomers dying, we still are going to grow in population every year until at least 2060.
Yes.
As of right now, we're going to break 400 million people. We're going to add another 38 million people. We will probably build about 15 million houses in that time frame, and the housing shortage will probably be worse.
Yes, and we will still be doing videos in 2060, and you will still be watching.
I'll be pretty old. It'll start with a 9.
All right. Well, I hope you had a little bit of fun watching the video. Hope it was interesting and informative for you. Please remember to like the video, subscribe, hit the notification bell, share the video. Please make the channel grow.
Yeah, you just click on the little arrow. You don't have to copy the link onto Facebook or X, Twitter. You can, but if you just click that little share thing, that just shares it with people who've subscribed to you.
All right, there you go. So we appreciate you watching. We appreciate you liking the video and sharing the video and your real estate related comments. We'll see you on the next video. Bye.
Bye.